here today with Chandra, co-founder of Portal to Bitcoin. You guys basically take the perspective that the utility in crypto is going to live on Bitcoin. Why do you think this is important?
In this industry, it's very common for people to hide behind their insecurity of their protocol. So we took the very hard and very long, the only right way, which is
You're building utility on Bitcoin on a chain that's been typically hostile to change. What's it been like to build in this environment?
our goal is to onboard the world's most important financial markets onto Bitcoin. That way, it does two things. One is
Great. We're here today with Chandra, co-founder of Portal to Bitcoin. I always like to start off with an interesting or unique question, and I want to ask you: when's the first time you came across Bitcoin?
2010, and then learned a little bit more in 2011, and then started mining in 2011. Just out of curiosity, kind of how to learn how the protocol works, and then started reading the history of like all of the prior attempts at creating, blind signatures for, peer-to-peer payments, all of that, and then I got more interested. And then after that, I mined, but I never thought I would do anything in Bitcoin as a project or a venture. It was always a side hobby, philosophically interesting, design-wise, very elegant, but no business interest. I was always doing traditional web startups.
Mm-hmm.
So, and medtech startups. So, in 2017, after our past exit, one of my co-founders pulled me aside and said, "Hey, you got to look at this Ethereum thing." And it's 2016 actually. I think end of 2016, something around that time. And I said, like, what the hell is that? We want to look into, ended up looking into it. Saw all of the ICOs that were going on. Basically, it's essentially the same story as the new L1s that'll claim to do this thing or the other as the past. And made a very good decision to actually spend a year relearning Bitcoin instead of wasting time on anything else. And that's and then said, you know what? There's a lot of people trading these things. Obviously, the volumes in business are there. The demand is there. Whether you agree with the philosophy of the underlying technology of all of these other alternatives or not, the demand is there. The solutions suck. So why don't we create a better solution for cross-chain trading, right? Like that's actually where the volume is in the whole of crypto is cross-chain trading, whether you call it spot, perps, DEX, whatever it is. And so the biggest problem that's always plagued the space right from day one, from the days of Mt. Gox to, recent Bybit hack of over $2.5 billion or something like that of ETH, multi-sig hack, has always been custodians. Every single custodian is a ticking time bomb. It's empirically validated. People lost about $30 to $40 with all of these trust me, bro, IOU kind of approaches and bridges and vaults and multi-sig hacks and recent Thorchain on-chain bankruptcy, insolvency. If you can stomach such a terrible phraseology, that's what people used. And so you need a permanent solution to this. You need to avoid custodial risk. And there are things that claim to mitigate custody risk, like Bitvium-based ZK bridges, and it's all nonsense. Message passing between cross chains is also nonsense. In this industry, it's very common for people to hide behind their insecurity of their protocol, not their personal insecurities, by the way. Insecurity of the protocol behind obscurity and technical jargon. So we took the very hard and very long and the only right way, which is true non-custodial nature, means it's atomic swap based, has to have Bitcoin level security, because our goal is actually to onboard not just these L1s and L2s that are coming out or the ones that exist, but the world's most important financial markets onto Bitcoin block space. That way, it does two things. One is it is important for the survival of the Bitcoin protocol itself because the emission schedule continuously goes down. And so the miner revenue has to be protected. How do you do that with the limited block space, right? There's block subsidy and there's block fees, transaction fees. Block subsidy is predictably going down. And if the price doesn't commensurately keep going up, the network security either stays flat or goes down. Resistance against retrieval attacks. But if you increase the fee by increasing the economic density of the transactions that use that limited Bitcoin block space, then you've solved that problem. Number two, it's a huge revenue opportunity. It's a big problem. I think you've already seen the kickstart of that with the US government putting GDP data on the blockchain. I think eventually Bitcoin block space will be the settlement layer for all significant, important global seamless markets.
So talk to me. I guess most people in the crypto space generally, I guess there's probably two big camps of crypto. And the first camp says, I'm a Bitcoiner. Bitcoin should just be Bitcoin, and I'm not necessarily worried about any other functionality on Bitcoin. The other group kind of sees the utility of smart contracts, and they see the utility of a chain that has, that financial primitives can be executed upon, but they probably have their favorite chain for it, and it's probably Ethereum, Solana, or some other chain. You guys basically take the perspective that the utility in crypto is going to live on Bitcoin. My first question is, why do you think this is important? Why do you think that the utility of crypto money should exist on Bitcoin? And then the second question is, how do you guys accomplish it? When Bitcoin has typically kind of been, just a ledger for moving around the asset that is Bitcoin.
That's a great question. So the initial promise of Ethereum was that it is going to be the world computer, which keeps the global state of all of the computing operations that are happening across every server, every computer in the world. That's obviously absurd, and the founding team lied through their teeth, right? It was never going to be possible, no matter what architecture they did. Forget about that. Now it's ultra hard money, whatever it is, right? Who outside of crypto, what kind of a traditional institution is actually using any of these chains for their enterprise relationships or for anything else other than stablecoins? That answers your questions. Like, I don't have to defend Bitcoin, right? Like, Bitcoin has a mission and a purpose and a 70-year-old history of the smartest minds trying to build something out of pure ideology, not for financial benefit. There's not a single chain that can claim that. So that alone should end the discussion on, like, why should no other chain be compared to Bitcoin? But there are revenue making chains. Like, for example, if you take BNB, that's a proxy for the revenue Binance makes. Those are like traditional businesses that have demand, that have some form of a revenue capture, that have some form of funneling that back into the token's value. Those things are valid. I mean, DEX tokens that are properly constructed with properly constructed tokenomics, like what we're doing, exchange tokens, and so on and so forth. They do actually have value because you can rationally value them. Everything else is, trust me, bro, this market is going to come onto this, right? Like this, we're going to do a brand new chain for gold. Yeah. Like, who's actually settling your stuff on there when there's like 1,000 ETFs on Fidelity and Schwab and everywhere else that actually are cash settled or physical settled? And at this point in history, it doesn't make any difference. So, crypto runs on narratives. We all know this. If you think a little bit deeper and spend more time, what other conclusion can you come to?
Right. And then so you guys kind of exist in this unique problem space where you're both building utility on Bitcoin in on a chain that's kind of been typically hostile to change, and I guess maybe even the concept of utility. I guess beyond utility as kind of like hard money or something. What's it been like to build in this environment, and how have you been able to kind of evangelize the concept of building something on top of Bitcoin?
So I'd like to separate Bitcoin from Bitcoiners because Bitcoin was built with a specific set of principles, not with a specific use case in mind. Use cases Satoshi was speculating on, Hal was speculating on. I think the best summary comes from Nick Szabo that we thought it was stateless money only. Turns out it's the best system of global seamlessness that humans have ever built. All the other hangers on and Twitter personalities who talk about Bitcoin, we don't really care about because they don't know anything about the protocol. They never look like one layer deep. Um, you know, for every movement, there are second-hand dealers in ideas, as Hayek describes it. So it's there's a bunch of people that cling on to something that they kind of understand. It's kind of like the elephant and floor for blind men, right? Everybody touches the tail and thinks, oh, it's a a stick-like thing, and so on and so forth. So opinions don't really matter to us. Rational understanding matters to us. We actually do support ossification of the Bitcoin protocol. We don't care about the people that heard about it yesterday. Oh, we built a brand new layer 2, so we know this opcode. It's like, yeah, so you can make money and destroy the nuclear grade security that was flawlessly built and engineered over decades and decades of thought and work. We actually don't care about any of the new opcodes. We don't want them. The beauty of what we're doing is like we don't need any changes to the Bitcoin protocol, but we're not a bridge. We're not sidechain LARPing as an L2. None of those things. It uses the exact opcodes and the protocol as it is today. And if new innovations like Taproot, etc., I mean, Schnorr we use obviously. So they come along through the proper BIP process, which is a very rigorous way of making any changes. So be it, but we don't need them.
So I want to dive into that a bit more. What makes you guys specifically different, or I guess you've addressed it a bit, but what makes you specifically different than other kind of layer 2 bridge solutions, native Bitcoin solutions? And I think relevant to touch on here would be exactly what the Portal protocol does differently than these other projects.
Yeah, I don't think it's fair to compare us to any other Bitcoin L2 or sidechain because most of them are sidechains. LARPing is L2s. L2s in our mind are either state channel based, payment channel based, off-chain settlement mechanisms that have the security guarantees of Lightning or Mercury layer. Those are the only two legitimate things that I can think of. Everything else is a sidechain. LARPing is an L2, right? That's the original definition of an L2. And so we use a construction called a channel factory, which was conceptualized by someone who currently works at Blockstream, came up with the idea of how do you overcome the limitations of Lightning. Lightning was built for payment forwarding, but it doesn't scale to 8 billion users. Absolutely not. And when you look at the exchange trading volumes, those are much, much, much higher than payment transaction volumes. We're not making 1,000 payments a day. HFT is making millions of transactions a day. So how do you scale that system while preserving all of the security guarantees? And a channel factory approach is a solution to that. It's been a concept for 4 or 5 years until we came along and picked that up and said, we're going to build this. And we're going to solve these problems. We're going to use the same atomic swap constructions that Lightning uses. And then actually modify it with multi-party channels to build what is consumer grade. It can replace a SEX today, any SEX. It'll give you the speed. It'll give you the low transaction fees. It'll give you the user experience. It's completely trust minimized as is Lightning. but this was specifically built to solve the trading problem and to onboard many different markets onto it. Now, Portal doesn't make any claims about the different tokens and issuances and what they represent because we don't run it. This is an infrastructure layer, right, for the industry. But if you do onboard a market, now you can trade just like you're trading on Coinbase, for example, without having to trust anybody. There's no regulatory arbitrage. There's none of that stuff. It's purely solves the mission of what the original contributors to this stateless money concept have envisioned. Yeah. I mean, cyber, you would say.
So is it fair to consider this kind of an evolution, or I guess maybe not an evolution, but something kind of building on and expanding on the principles used to create the Lightning Network?
That'd be fair, yeah. Yeah, but solving the problems, see, Lightning is built for a specific use case and it works well.
Right.
This is built for a different use case, but using almost the same principles, but exactly the same security guarantees.
Right. And then something I guess that would be important to talk here is the ability to build applications on top of Portal. Can you talk to me a little bit about that kind of ecosystem?
More so than applications, it's about integrations. And the reason why is we're not trying to say, oh, we are a new high performant blockchain with 2 rounds of blah blah versus 3 rounds of BFT, PBFT. Is like nobody gives a shit. I mean, honestly, there's like a million of those right from day one. Once people said, oh, proof of stake is more efficient. Yeah, the world currently runs on proof of stake. Everything, every corporation is a proof of stake. It's on paper because distributed, replicated state machine logs are inefficient and it makes no sense, and it's insane to waste your time and energy like that. Proof of work is the unique innovation in the world. It's once in a lifetime kind of a thing, kind of like what the LLMs were in the AI space. So when you're talking about or transformer architecture, whatever you want to attribute it to. So the question about
integrations or utility.
Yeah, integrations versus applications. Applications are if you're building a brand new ecosystem, trying to replicate what Ethereum did, or all of the developer interest on another chain, right? Like Sui or whatever else, right? We are an app chain focused on one specific thing. Our notary chain, which is basically a way to reward a distributed network, a decentralized network of validators who never hold custody of LP funds, never hold custody of user funds, is to build more integrations with other markets and other products that have actual proven demand. So I wouldn't call it more necessary. I mean, you could technically build an application using the integration as a backbone, right? You can build an interface and you can get a lot of distribution. So I would say it's a mix of both.
Right. But you should kind of think of it as different to any other kind of way people think about crypto ecosystems generally, right? Where these things are going to be more, I guess, independent. Is that fair to say?
It's openly available. Anybody can build using Bitscaler. It was a primitive that was specifically developed to enable onboarding other, first increasing the breadth of the products available, like perhaps stables, payment mechanisms, treasury management, or whatever it is that you're trying to do. But also, more importantly, build the integrations into, let's say, stablecoin blockchain, or a point of service thing, or a digital on-chain bank, or whatever else developers can come up with.
So I guess,
or partners can come up with.
Right. So I guess to understand it a little bit better, I think when people typically think about crypto ecosystems, they think about kind of a layer built on top of a a proof of stake chain, for example, where there's a bunch of different apps and they're kind of interacting with each
Who's
other.
using those apps though? I mean, show me the usage and the fees and the revenues and all of this is it's eh, you know there are real markets and there are imaginary markets. And there's this old saying, if nobody else can see it but you, it's not an imagination, it's hallucination. So
So talk to me about how you guys are going to create something that is more tangible.
no, we're going after the sex market, which makes hundreds of billions in revenue a year. I mean, it's proven demand for over a decade. You can't get more certainty than that.
So the most fair comparison then around Portal is directly to, or I guess not a comparison, but a competitor would be a centralized exchange. Is that how you kind of view it?
Yeah, we're disrupting the entire model of how we do cross-chain operations. So who are the players now? Centralized exchanges, bridges, um, third-party custodians like Thorchain, and so on and so forth. That's the exact market we're going after because it's, you know, for you to have the question of does anybody need it, there's no a simple test. Is anyone paying for it? People have been paying for it tens of billions, maybe more every year for more than a decade. So what more proof do you need? If you have a superior technology that is a quantum leap, that's basically where you would want to spend your time and energy versus trying to bamboozle people. Every startup founder says this, right? Like I imagine this, but going after an existing market is always better because it then comes down to your operational ability and not the complete uncertainty of whether anybody would want your product. That's a much harder problem to solve.
I guess something to consider here is the fact that typically or most centralized exchanges have embraced a wide variety of assets, from Ethereum to strange L1 projects to even like meme coins and stuff.
Yeah,
How do
yeah.
you guys look at that? Are you
We're
agnostic to?
agnostic. We're agnostic. Whatever people want to do, they should be able to do, right? Like that's our philosophy of that. We don't control the chain for one thing. Post mainnet, we don't control the chain. Um, it's complete. It's rotated between a set of validators based on how much collateral they're putting at risk, right? To secure the liveness, not not the custody risk of anyone's assets. If people want to trade meme coins and NFTs, so be it.
So how does the network token? You guys recently announced the launch of a network token PTB. How does this network token capture value in this system?
So great question. So most tokenomics did not consider this. They've had infinite emissions till the end of the thing. And the big assumption, I mean, like all models are stupid. You only need to look at the assumption sheet, right? The assumption is that there'll be infinite demand for this, so we can continue to infinitely issue this, and basically that nobody uses, and somehow someone will believe in it. It's a greater fool theory. If you have a product that actually has utility, and then you have, think of it this way: Binance has X number of tickets. You need that ticket to actually access their services, or Amazon, let's say. And if there is a demand for that network, right? An exchange or a DEX is a two-sided network. There are people who provide liquidity, makers and takers, or, buyers and sellers, and then there are LPs and traders, or however you want to describe it. They're paying fees, so there's demand. This is basically an access control to access the demand or access the supply of the services that there is demand for. So if the supply of these access controls is limited and there's a lot of demand, which actually feeds on itself, as more people come in, spreads narrow, more traders come in, more liquidity providers are attracted to yields. If you want to keep the flywheel spinning, you have to have these access tickets, coupons, let's say. And if they're limited in number, and if the revenues continuously get recycled into buying and burning, then to reduce the supply and equilibrate the supply and demand, the network value from here on until infinity should be captured by the token. That's the underlying philosophy.
So I
Goes
guess
with corporate tokenomics, in my view.
so. The philosophy is kind of around scarcity and continuing to apply the value created to the net in the network to the token.
Yeah.
Talk to me a bit about the ecosystem. You guys have an ecosystem fund. What are you looking to be built? Using Portal's new kind of technology.
Yeah. So the whole point is to improve and increase the visibility and the usability of BitScaler, which is probably the most important financial primitive that is new, that came out in the last several years, I would say. Because it allows you to expand both the breadth and the depth of the kind of products that you can build and leverage Bitcoin security with no new custodial assumptions. So whether you want to do bond issuance, right, or stablecoin payment rails, or across chains, and treasury management solutions on chain, you can build a hedge fund on chain. Anything you want to do, it allows you to do it without being restricted to the throughput and the block space restrictions of Bitcoin. And so everyone knows Bitcoin is the most secure chain. There's never been anything like it, and likely won't be, right? So if you want to build, let's say, oil settlement markets across the world, this is how you would do it. There's no other way to non-custodially scale and onboard millions of different markets onto Bitcoin other than what BitScaler does.
So do you think the scope of Portal is kind of the scope that maybe like Ethereum tries to address, where you want kind of the end state or the winning state would be something like having all global financial markets settle on the platform, on the technology?
Yeah, and the only chain deserving of that is Bitcoin, in our opinion.
How do you approach that problem? Obviously, this is a massive problem. I think most, or maybe not most projects, but a big subset of crypto projects are trying to go after this similar problem to mixed degrees of success, as we've chatted about. Do you think just the technology will be able to draw what other chains have not been able to do, or is it also a business development problem?
This is one of those basic startup questions, like what wins, better technology or better distribution? Better distribution, obviously, right? The unfortunate thing is, even with all of the money thrown into KOLs and all of that stuff that crypto projects do, they've had no distribution. So that white space is wide open for us. If you know what you're doing, if you know how to onboard the right projects, I mean, the process is very simple. You go after the market with the highest need, okay? A congruence, meaning like the problem actually fits the solution, is fit for the solution. And then highest importance, least satisfaction, easily able to access. I mean, you just apply the standard startup principles of how you would try to bring any new product or project to the market. You identify where the need is. And that's what the ecosystem fund is for distribution. The technology is already pretty mature, and of course there will be improvements and so on and so forth, but those are not, 99% of the work has already been done. Now it's actually market distribution, penetration, so on and so forth.
So you think the tech problem, I guess, in that tech versus distribution question, you kind of think we've addressed the tech problem. From here on is where we address the distribution.
Correct. 100%.
And how would you walk us through that roadmap? So it seems like first you guys are going after this kind of like pool of assets traditionally addressed by centralized exchanges, and then how do you imagine the distribution going forward after that?
Yeah, we have some important and interesting markets that are emerging, right? Like stablecoin rails. It's very interesting. So we have some interesting partnerships coming up. You'll read about them. To securities, tokenized stocks. 3, Web2 assets that are restricted from being traded but have proven demand, like Web2 accounts, like for example, Web2 game accounts. There's huge black market for trying to trade in-game goods and accounts. The publishers don't like it for various reasons, understandable. But now you can atomically swap any blob of data against a big company, right? Like using the scaler. So whatever it is, you don't need a trusted middleman. The next billion users everybody's searching for are not like trading gold or oil or whatever nonsense narrative they spin up. The next billion users are on Discord talking to their friends, trying to exchange economic value on their games that they play or in-game goods. That's where you want to go. You just take one simple market that nobody is focusing on. You just dominate that little niche and then you expand. It's you don't want to tackle everything at all. The ecosystem fund is not going to be spraying and praying wide and far just for optics. It's going to be very focused on developing specific markets.
What markets are those?
The one I mentioned right now.
So you mentioned a bunch of kind of novel use cases or use cases you're hoping to bring into your ecosystem. Do you think that these will mostly be executed on by existing players, or do you think that these will be new kind of companies and startups that will address these markets?
No, we want to go to existing. I mean, see, when you say existing players, you're right. Existing players, not existing Web2 publishers. We don't want to deal with them. You don't want to try to swallow or bite off what you can't chew. You can completely ignore them and go directly to the gamers.
Okay.
Yeah, we're not talking about Web3 bullshit games, right? Like we're talking about games that billions of people play, get a lot of enjoyment from. It's a cultural phenomenon. It's a way of social interaction. It's a way of bonding. We're just putting the economic exchange layer on top of it. That's a real market that I can wrap my head around. If I said, "Oh, I created what was that game again? Axie Infinity. I raised 200 million from A to Z. I call it A to Z because they spray and pray instead of A16Z. But and so therefore, blah blah blah. If you play this game, you earn money. It's like game by definition is played for the enjoyment of playing the game, not to earn whatever it is. So you forget that, your results are going to look like Axie Infinity. So we don't really care about Web3 games. We go where kids are spending inordinate amounts of time actually playing and getting enjoyment out of it.
So I guess to me that idea seems kind of easier said than done, right? Where it's like, okay, I understand how
it's easier done than said because it's already happening. People do offline. There are middleman bots that allow people to do this. It's just that there are third-party trusts coming. You do understand how big these Web2 game markets are.
Yeah,
we don't have to go talk to the
massive.
publishers, right? Like, we've done so much research on markets like this, and we have some very high conviction markets, ones I mentioned and some I haven't for a good reason. And obviously it's not like, oh, I'm guessing, right? There's a lot of work that went into it that doesn't guarantee success, but that's why the ecosystem fund goes through it like a venture studio one by one.
Right. So the philosophy then would kind of be like, we want to address markets that can natively come onto the platform or can natively use the technology. We don't need to address the publishers.
That's right. We don't have to even talk to them or know who they are.
That's kind of an interesting perspective. I think that's like a very non-consensus opinion. Obviously, we see most projects go out there and spend, millions, tens of millions, hundreds of $1 million to sign some big
contract. Nobody gives, nobody cares about your WeChat contract because are the WeChat users actually needing your service? Mm-hmm. Here's a problem where kids need it. The gamers need it. They want it. They've told us by the hundreds, thousands.
So I guess then you are, it's kind of a refreshing perspective really, because you're going to the problem, you're integrating your technology where you think it's needed or where it's being asked for, and you're kind of going back to the original, like, cryptographic principle or I guess cryptocurrency principle maybe of this kind of idea of permissionless, where it's like we're just gonna do it.
Yeah.
It's a cool perspective. Do you want to talk to me a bit about your token? It's coming out really soon, and I guess what are your goals with the token, and how do you see kind of the token progressing over time?
Yeah, the tokenomics I already talked about. The reason for introducing the token is that in 2024 we introduced a tokenless peer-to-peer order book based DEX using essentially the same technology, except the multi-channel, multi-party channels and the AMM design. It failed. So what we learned is that this is a much better user interface for people, and someone, if you assume that every user will run the full nodes of every blockchain supported, right? They will always maintain state, and they will always be online, and they will be able to broadcast the right message to the right network at the right time, because those are the constraints of atomic swaps, whether they're L1 or L2 swaps. Then you don't need the token or anything else. The token exists to incentivize two things. One is because we switched to an AMM design and nothing else works, you need an incentive for people to provide liquidity. And two, because every user can't be expected to be online at all times, which, again, you'll get zero distribution and you'll be right. Being contrarian is not good enough, right? You have to be contrarian and right, which means everybody else has to be wrong by implication. And so it rewards. So who are the people that will continue to perform this function? It is not us, the company. It is not the foundation. It is the validators who rotate, who put money at stake to continue to perform this service, and they have to get paid. Why would anybody economically, irrationally do this? So think of the Portal network as the distributed network of watchtowers that perform this function. And they have resource costs, they have liveness costs, they have all of these things. They need to be rewarded. And where do the rewards come from? For the services that are being accessed by the people, being in the form of fees. And that's all the token does. And because it's fixed supply and we see proven demand, and we expect the demand to continue to go up as newer and newer markets are onboarded, it makes sense rationally, economically for us. Having said that, I don't give any financial advice or investment guarantees or investment advice to people. So
right. So from that perspective, it's kind of you have two piles, right? You have the economic network, which is validators, tokens going to validators, and then you have this liquidity being incentivized. What does that part look like, that liquidity incentivization?
So it's kind of like maker taker dynamic, in the sense that liquidity providers are needed for the AMMs to work well, obviously. Without liquidity in a pool, and they have to have some yield. Why would they put their money and take a risk of impermanent loss, right? To mitigate that, the reward system has to be strong enough so it captures a lot of the value coming from. And if the network is growing, people are adopting more, they should be able to get better and better rewards over time. Same thing with the validators. There should be there's a competition as the value of that they can derive from this competitively keeps going up. It's similar to Nakamoto competition in some ways, not exactly.
I also see a parallel with centralized exchanges again, where centralized exchanges are incentivizing or incentivize liquidity on their order books. You're kind of bringing liquidity to the AMMs in a similar way.
Yes, but it's permissionless and open. Yeah, that's the only difference.
What's your greatest ambition with Portal to Bitcoin? On a 1, 5, or 10-year or even longer time frame.
That it becomes the most important derivative on top of Bitcoin. It's the adapter between Bitcoin, which is an inward-looking, internally consistent, isolated system, and all of the world's great financial markets have nothing to do with Bitcoin right now. despite what the Bitcoiner narratives are and what Michael Saylor says when he's drunk or whatever. Um, the only connection between Bitcoin and the traditional financial system are ETFs and horrible stocks that claim to have some form of yield in the form of Bitcoin. It's obviously retarded, right? Like I don't need to go into that. Anybody who has any sense of corporate finance will tell you that it's obviously retarded as long as if the number stops going up. So, but if you actually have a trustless, custody-less, seamless adapter between these financial markets, you bring a lot of financial efficiency to the traditional markets. That's where the money is. $6 trillion of notional value is traded on forex markets. How much is traded on intercontinental exchange? That's the real economy. We want to onboard that onto Bitcoin, not some imaginary bullshit market that doesn't exist and we will never exist.
Right. Plus, that scale is so much broader than most financial intermediaries or crypto projects or anyone is really working on. It's a really ambitious vision, and it's still aligned with Bitcoin because the fees are still going to support the Bitcoin network. So it's both aligned and much broader.
Absolutely. Yeah.
Excellent. Well, what are you most excited about for the next kind of couple of months for Portal? What should we keep an eye out for besides the token launch?
Obviously the mainnet, initial set of validators, network stabilization, any technical issues, and then onboarding the first set of users and making sure they have a seamless experience, and building that viral loop, which is much harder said than done, or much harder done than said.
If you were to chat, my audience is full of people who are curious about using products like or products networks like yours. If you were to talk to one of those listeners who said, "Hey, I want to engage with this ecosystem, I want to engage with this technology," what's the best way to kind of approach that?
First one is go to portal2bitcoin.com and look at the documentation. Depending on what your idea is, there's after the launch, there's going to be a grant submission process, right? Submit the grant. It is openly available. It is non-bot voted by the community with the stake in the network. And then obviously, as the developers, we will have our say in it because, the outsider, just because he bought some coins, doesn't have the insight into the technology of the network that we do. And the foundation has its say. And then there's obviously the, surfacing of the ideas with the most promise and the most rigorous way of vetting them. That's an exciting thing. Some of them we may directly help. Some of them we just give the grant and stay hands off and watch what happens. So because our bandwidth is limited, and so that's that's the most exciting thing.
Excellent. Chandra, it's been awesome chatting with you today. I really appreciated your strong opinions. It's not often we get a founder with such strong takes, and I think that speaks for your conviction and your ideas and what you're building. So I really appreciate that and had a really enjoyable time chatting with you today. Thanks so much for hopping on the podcast.
Thank you for being an excellent host as well. Good luck.
Good luck to you guys as well. Thanks so much.